Hello and welcome to Fintech Diary. Every week we speak to an industry expert who's part of the fintech revolution. In the world of fintechs, which is based on constant evolution and innovation, we question change makers on how they plan ahead and read the future developments, specifically in the fintech segment. In every chapter of the Fintech Diary, we get the breadth and depth of every segment related to fintech. My name is Amol Deshe, and my guest for this chapter is Nithin Kamath, co-founder Zerodha. Nithin, glad to have you.
Thanks, Amol, for having me on the show.
Sure. So, Nithin, to begin with, can you give me some current statistics in terms of how many investors are there with the Zerodha right now? What's the size of the volume that you have every day? Because a lot of people are trading on your platform. How many years have you been operating in this space? How many employees are working with Zerodha?
We started in 2010. So we are like 12 years old now as a business. We have around 1 crore plus customers. So I think most of the growth really happened in the last 4 or 5 years. So when when this whole Aadhaar onboarding started in 2016, we were at around 60,000 customers, and then the business from there has gone from now 60,000 to 1 crore. So a lot of growth. I think even this whole COVID period, just before COVID happened, we were at around 20-25 lakh customers, and so we are now at 1 crore. So the business has actually grown 4-5x from then. So in terms of number of people, we are a team of 1,100 people. We were 1,100 people even before COVID. So we take great pride that we've been able to scale our business without really having to scale our operational costs. So the economies of scale has kind of kicked in. We do between 20 to 25% of exchange retail trading volumes. So 1 in 4 trades happening in Indian Stock Exchange comes from a Zerodha customer. We also run Coin, which is the largest direct mutual fund platform in the country. Has I think over 30,000 crores in AUM now. Our customers together hold more than 200,000 crores of stocks with us. So there's a lot of trust built. So people like the demat accounts that they open with us, they keep stocks as well. So we are largest broker in the country by trading volumes. We are probably the second or third largest, behind the bank brokers in terms of asset under management of sorts. So people holding stocks. And in terms of new users, I think we are maybe number 2, number 3 of sorts. So because we charge an account opening fees per user, so we have never spent money to acquire a customer. So which meant that we've never actually added customers unless the customer was very serious to trade. So that's how we stand today as a business.
Thanks for sharing that pie chart with us so that we can get an idea about where you are standing right now. Obviously, we do understand that you have created a great revolution and innovation and a major transformation specifically in the area which was dominant by traditional players, and it looked very traditional, though the whole market is very much digital, very much online, and the format is online where you can buy shares in demat accounts and everything. But still, it was a little complicated in terms of buying shares and everything, I think, which with the mobile application became very easy. So my immediate question that comes now, Nithin, is after 12 years, what next from here? Are you also going to buy glass buildings or glass houses like other traditional brokers which are in Mumbai, or and also enter into the traditional space, or are you happy with the online space itself? What is going to be your next strategy now?
Yeah, so we started the business thinking that we need to reduce costs and bring transparency to the business. And when we started the business, we were focusing on very active day trading and very active trading community. And then soon we realized that audience is very small. We became ambitious and we said, we need to do more. And that's when our focus became saying, we also need to address to our investor audience in the country. So that's how the platforms evolved. At that point, we realized that education itself is a big problem. Most people don't understand finance very well in this country, and So we started Varsity, which was our first, like an education initiative. Today is probably amongst the top 3-4 MOOC educational initiatives on capital markets around the world. And then the business grew, etc. But then what started off saying that we need to make it, lower costing, simpler to buy stocks, or giving access to all tools and whatever a trader requires to do well in the markets, be it education or whatever. So we worked on it over the last few years, but the question really internally we've been asking is that, has it helped people to do better with their money? Because at the end of the day, we exist because ideally the reason we should exist is because our customers do better with their money because they use us, right? And maybe there's still a lot more to do there. We haven't done enough, and so the focus right now is really that, is to say, how do we get our customers to do better with the money? I mean, when I say better with the money, the idea is to say, how do we find ways to reduce our customers' money mistakes, right? Because there is no right way to make money in the capital markets, right? Every person could take his own route to make money in the markets, but I think there are very clearly a bunch of wrongs that you shouldn't do, right? As in, like those 4 or 5 things, like portfolio diversification, going against the trend, disposition bias, and all of that. So we are trying to see if we can help customers reduce their money mistakes. So our the big initiative right now that we're working on is this platform called Nudge, which is like a layer, like a user experience layer on top of the trading platform. Think of it this way, as in, if say on Swiggy you ordered samosa and Swiggy said, what, samosa is not that good for you, healthy for you. Maybe you can look at these healthier options. Right? You as a customer still has an option to choose what you want, but platform can nudge you into a better habit of sorts. So today at Zerodha, if you're trying to buy a penny stock, which is we firstly we tell the customer there's a penny stock, the risk is too high, and then we try to nudge him to reduce the trading size if possible. It's not paternalistic, as in it doesn't disallow customers, so customer can override it. So we want to be like a nudge of sorts. So and right now we are, the next big thing really that we are working on is to be able to help people avoid these money mistakes. And the thing is, if you avoid these money mistakes, your odds of doing well in the markets increases significantly. So that's really helping people do better with the money is really the next big thing that we're working on.
Right. So that sounds a little meaningful for me, Nithin. In fact, very interesting. But how will you do it? Because there will be a lot of people who will be perhaps interested in only penny stocks because of the volume, because of the size, because of they believe that the penny stock will become the next multi-bagger. That's what the theory is, and that's what the narration which most of the brokers or the analysts have built. People have seen the Wolf of Wall Street, right? And that's how they look at it. So in a way, you are a platform where you are actually helping them to buy stocks and not advising them to buy stocks. So will there be any interfere in terms of what you can say contrast? Because people are using the platform just to buy the stocks, but you're also trying to guide them, not to buy this.
Yeah. So no, like I said, so firstly, it's not paternalistic. So we are not blocking the customer. So customer can always override everything. So if say a stock is at 100, it's at 10 rupees. You want to buy it. This is the next thing that we're working on. A lot of people think just because the stock was at 100, if it's available at 10, it's cheap, and they want to buy more of it. Right? So it's not like we're blocking the customer, but we're trying to make the customer aware that this is a mistake. Right? So if you're buying penny stock, it's okay. Or take a small exposure to the market. Reduce whatever is the size you want to trade with. Now, of course, a customer can override it and say, what, dude, I'll do what I want to do. You shouldn't be, really telling me what to do. But I think, until now, platforms have taken a stance that I'm not obligated to think of customer interest. So, and I have a feeling, that's not enough for platforms to do. I think platforms eventually will have to do what's in the best interest of the customer. And alerting the customer is the best interest. I completely come from the school of thought that every customer should have the freedom to do what he wants to do. But I think platforms should be obligated to at least tell the customer what's right, what's not right. And this what's not right, I'm not even talking where it's debatable. Right? I'm talking about very basic money management rules that everyone understands, which is portfolio diversification, which is don't sell your winners to buy more of your losers, and which is, if you're taking risk, take it with a small amount of money, or so stuff like this. If these 4 or 5 very fundamental money management rules is something that every person who participates in the capital market should know about. What we're trying to make here is we're trying to educate the customer using this tool of these 4 or 5 very fundamental rules to trade in the markets.
Okay, noted your points, Nithin. I will come back to you specifically on the platform at the end. But before that, now tell me something about the whole digital model that you have built up. Okay, I can understand the great usage of data and AI that you can do at this platform. But when you say that in the last 2 years itself, we have a large number of customers or investors came on the platform, my observation is, many people also came on the platform because they had a lot of free time and they wanted to explore new areas. So I'm sure you must be reading this data point. So the rally that we had seen in last 2 years, specifically during the COVID time, is it sustainable?
Yeah. So see, firstly, we don't do any data analysis at all, right? So we never look at customer data, and we haven't really found any use case of AI in our business. I mean, a lot of people talk AI without really meaningfully using AI in any way, right? So there is, I just want to put it out there. Now, in terms of what got the business grow in the last 2 years, I think more than free time, it was greed. I mean, right? Because you pick up any point in history, when one asset class is outperformed, which leads to greed. As in, greed is what gets people to participate. Of course, it was greed plus free time plus also the fact that people are not spending as much, right? Because people are spending more time at home. So what it meant was, people had more money on their hands. So which also found its way to the capital markets. Now, will the increase in participation sustain? It will not. I mean, I've been very public about this now, that India doesn't have. No, I mean, there are 5.5 crore Indians who file income tax. To be able to save, invest in the markets, you need to have money in your bank account to be able to do it. And my guess is not more than 10 crore Indians have enough money to be able to invest in the markets after meeting their very minimum basic needs to sustain life, right? So yes, it's very tough to see how the user growth can continue at the same pace. Can market sustain the bullishness? I mean, see, India is doing well as a country, but at the end of the day, we are going to move in sync with the global markets. I don't think, we can somehow, entire world is falling apart and, somehow India shines. I don't see that happening. But what we've seen, what I'm sure also about is that India, relatively to other countries, will probably do better. The reason for that is because India, capital markets in India has almost no leverage. A lot of problems that you're seeing today in the US markets are, even crypto, etc. These are all side effects of leverage. Leverage is, or people when they borrow to buy more, etc. So it causes a lot of excesses on the upside and also on the downside. So because India doesn't have those problems, I think we've outperformed the markets in the last 3 to 6 months. And my guess is that we will continue outperforming for a while. India is we have a stable government, we have the highest number of 20 to 30 year old, we have a GDP that's one of the only few countries left in the world that's growing, in terms of GDP growth, etc. So I think India will do well. But like I said, we are in a world where every country is connected to the other. So if US is going to keep falling, there is no way India can somehow, hold up and go up as a capital market.
On that part, obviously, most of the economic indicators, despite a lot of challenges, are still in green. Obviously, market is in red and very volatile. But major economic indicators are still very supportive, and many foreign investors are still very bullish on India. That sounds really good. But my question is more about the observation in terms of the new age investors, maybe millennials or Gen Z, those who are using your app and in the portal or the platform very aggressively. By any chance, have you observed the trend? Are they investing in what you can say? Are they trading aggressively or they investing aggressively?
The thing is, most of the 20 to 25, 27 year olds of sorts, they don't have access to too much money, right? So firstly, while the user numbers are quite large, but the per user value of the money that's come into the market is much lesser, so you will have to map their trading behavior based on the AUMs as well, so it's not, there are people trading, there are people investing, but I'd say there are more people investing than trading, who are actively trying to time the markets. There has also been quite a stupendous growth in terms of mutual fund SIPs from this audience. So it's just not that they're just actively trading the markets. They're doing everything. So I mean, there are different cohorts in this. Who are one who's actively trading, one who's investing directly in stocks, and there's one group which is actively doing mutual fund investing. Now, is this audience, is this a risk? Because a lot of these youngsters who don't understand the markets, trying to dabble in the markets, it is in a way a risk, but in a way it's actually also a good thing, because these people will learn with when if you make mistake with small amounts of money, as in it's in a way good for them, right? I mean, you rather learn early in life, these money mistakes than later, because if you learn it later, you're potentially losing a lot more money. I mean, a 40-year-old trading and investing, he'd probably be putting a lot more of his savings and etc. from before, versus a 25-year-old who's probably putting 1 or 2 months of his salary to trade the markets. So yes, I mean, that's really how I look at this.
Interesting points, Nithin, on that front. So is it a mix? I mean, people are also investing aggressively on SIP side, mutual fund side, those who don't want to go maybe trading or investment side specifically on the stock market.
Like I said, you have that audience has everything. There are people actively doing mutual funds, actively investing directly in stocks, and also actively day trading the markets, etc. So it's just that they're all doing it in smaller amounts of money. That's the start.
Okay. Now, let me ask you something very important, Nithin. Obviously, when you started maybe 10, 12 years back, the online or maybe the typical platform culture was not, very well versed with the audience. Though a lot of companies have started offering online solutions, and that's where you got a really good benefit out of it, and many people jumped on your portal. But now, when we look at the current situation, a lot of traditional brokers, you name any, and they have their own mobile applications. They have also observed that the people prefer to buy more on mobile phone specifically, or mobile app, than the desktop, right? So these are very different trends that we have seen. So what I'm trying to learn from you is how competitive will it be for you going ahead, and how prepared are you? Because the traditional brokers, which also have some benefits, like they're part of their own banks, right? And maybe they are offering better solutions to the customers on that front. So how prepared are you in terms of, because the competition in this space is going to be, it would be very competitive going ahead.
No, absolutely. As in, it's just not now. It's I think that whole transition started like 3 or 4 years back, and it's just picking up pace now. The thing is, let me give you an analogy, right? As in, why do, say, a Tesla car sell more than, say, a Ford electric car, right? That's because Tesla car is a more evolved, a better product. Eventually in this business, it will all boil down to that. As in, whoever is able to put a better product proposition is going to stay ahead in the competition, right? As in, so just offering a mobile app is like just anyone making an electric car, right? As in, it's not that. Competition will really be based on the quality of the product. A trading platform isn't just the interface where you look at the stock and place an order. A trading platform is really an ecosystem. There is reporting, there is the underlying technology, which is the backend technology, which is extremely complex, which is, the act of placing an order is very simple, but everything that happens at the backend, in terms of being able to power all of this is really complex. Now, in a low-cost model, the only way to make money is at scale, right? As in, if people are charging 10 rupees, 20 rupees per trade, you need to do 1 million, 1.5 million, whatever trades a day for the business to make sense. Now, when you start doing 1 million, 1.5 million trades, a lot of tech doesn't work, right? As in, some car, in technology, in the business of technology, one is to make something work, and one is to make something work at scale, right? So for our competition to be able to do something like that, they will also have to be able to scale the way we have scaled our backend tech. So this is really, I think it'll eventually come down to the better product wins, not just in terms of a UI, because when I say product, a lot of people always think my user interface and user experience is the product, but it isn't. I mean, really, that's the simplest thing anyone can build. You can get a good designer and have a good looking screen in like few days. But really the most complex bits about the platform is the tech that goes underneath, and like how you build the business, right? As in, like, for example, like you said, from 2 million to 10 million customers, and we didn't have to increase our team size. And the reason for that is because the work we have put in terms of technology to leverage tech to scale our support as well, right? So yes, I mean, I'm not saying that people can't do it. People will eventually do it. And in this world, there is no status quo, and everyone's going to get disrupted, including us. But what I was trying to get to was that this isn't as simple as saying I have a mobile app, you have a mobile app, so we are same product. It isn't. It's a lot more, because the quality of the app is really what will make the difference. And the quality of the app isn't just the user experience, and just not the user interface and user experience. It's a lot more. The other challenge in this business is, I mean, this is not a problem for incumbents, but it'll be a problem for new guys. Is credibility. And people don't trust their hard-earned money on any platform. I mean, broking platform isn't a transactional platform. It's a platform where you'll have a long relationship. Like, it's your bank type, right? As in, once you have money in your bank, money is going to sit there. So will you put money in a bank account which you don't trust, right? As in, that's the reason why HDFC, SBI, ICICI are so big, right? As in, because people trust these brands. So for new people who are coming to the markets, I think, other than the technology problem, the problem will also be of credibility. Like, how do you build credibility with your customers? And you can't really spend money to build credibility. It's a very hard task. It takes time to build credibility. Just like first 3, 4, 5 years of our business, people hardly used to trust us with their money. So, but that took time. And today people trust us as a brand, etc. So with the newer guys, the challenge will be, the traditional banks will not have a problem because there is already trust built. But I think the traditional guys will have a problem of being able to technologically stay ahead, because they have a lot of legacy issues. For the newer guys, I think it will be credibility, which will take some time to get. But it's definitely interesting times, because a lot of people have suddenly, it happens in every bull market. At the top of every bull market is when there are most number of stockbrokers, out there. So we are very close. I mean, we're almost near the bull market. So we need to see how the markets play out over the next 3 years.
Absolutely. So I buy your point on the UI and UX part, and thanks for in fact talking about it. So I would like you to add more to it, because the many startups and fintechs obviously are offering a greater UI and UX, and we think about the user experience. That's what the financial ecosystem and institutions are all talking about, offering and building a great apps. But what goes behind it, and what are the major challenges that maybe startups or innovators like you face? Because a lot of things are still very traditional, right? At the back end, a reconciliation settlement takes its own time. The processing, it takes its own time. Servers are still works in an old fashion. So what are the major challenges that you see? Because the 22-year-old boy is buying a stock specifically on your platform, feels that okay, abhi maine buy kiya hai, it should be in my account immediately, but they perhaps don't know that there is also T+3 and not T+0, right? So managing all this, what are maybe 3, 4 key bullet points in terms of challenges you would like to highlight?
See, the thing is, I'll seem conflicted to say this, because for everyone their problems are bigger. But I think stockbroking is really one of the most complex pieces of technology to build in terms of the risk management system, the settlement and clearing mechanisms, etc. Because of the dependencies that exist on so many different entities, right? As in, for example, when you log into, say, our app, when you see the prices is not with Zerodha, right? As in, we are fetching the price from the exchanges. There are 3 different exchanges. Now, to each of these exchanges, we connect through lease lines, physical lease lines. So you cannot, that infra can't be on the cloud. So we have physical hardware sitting in, these data centers in Bombay, tapping to different, exchanges call it as POP. You connect to a POP of the exchange and you get live stream. Now the problem is lease line, somehow commercial lease line in India still sucks. While it's just still we are, the quality, etc., is still a long way to go to catch up. So if say one of the lease lines went down, all our 10 million customers will not be able to see a price, right? So we have to have backups in terms of lease lines from different POPs from different areas in Bombay and in different cities. So, for example, we have a Chennai setup because Bombay could have a power failure which affects all data centers in Bombay. So one is that. So that's order. So we get the feed from the exchanges, and then we have to send it to 10 million customers. Right? This itself is a technological challenge, right? Because it's like everyone watching Hotstar TV at the same time, the cricket match at the same time. Right? As in, during the 6-7 hours of our trading, everyone's kind of looking at the stock prices. So we have to have a tech in place to take that data and stream it to 10 million customers. And then say when a customer places an order, the order first has to be validated, saying the customer has sufficient funds, and there are a bunch of risk management checks that exchanges and SEBI ask us to put on an order. The order has to go to our order management system where the status is kept, and it has to be fired to the exchanges. So you use the same lease line and send the order back to the exchanges. And then you have to wait for the matching to happen at the exchange because it's not an instant matching. So for example, a stock is at 100, you say I want to buy it 99. The order will be a pending order there, and we have to continuously keep tracking the status of that order. So once the order gets filled, we have to update in the customer front end, right? So this is really the trading aspect of it. What people don't understand is that, like you said, there is a settlement aspect to it, which is at the back end, which is at the end of the day, exchanges net off all trades and give you credit or debit based on what your overall customers bought or sold a certain stock, and then we have to settle it between each of the customers. So it's and all of this, at least the trading aspect is so much more complex because you cannot. All of this is happening in milliseconds. I know it's not like Amazon or Flipkart where you can say first there was some issue with payment, some issue with this thing, come back in a little while. Because if we are down for a minute, we are trending everywhere, right? So the challenge is also the fact that there are millions of such orders being placed in a 6.5 hour window. Within that window, the first 15 minutes of the day, the last 15 minutes of the day is very concentrated. So all our infra should be able to is built thinking of the first 15 minutes because you have to have the infra ready at least 2x of what your first 15-minute volume is. So it's generally the thing is, I think the reason broking is so much more complex than say banking or lending is because in broking the dependency is on exchanges, clearing corporation, depositories, right? I mean, you're depending on all of these three guys to really be able to, the customer doesn't see any of these people, but these three people, you're dependent as a business on these people. So makes it a lot more complex than say a lending platform, because in lending platform, there is no dependency on any third party. You come on my platform, we are having a direct relationship. It can be slow. I can take a few minutes and, we can still, fulfill that, that kind of whatever the business comes through there. But yeah, with broking, it's complex because it has to be in milliseconds and at scale.
Okay, you gave a detailed answer, Nithin. I think it's really meaningful. Now, let me shoot maybe 2-3 very quick and short questions. One is a fact check. Are you profitable? Point number one. Point number two is how much is your revenue per customer? And third, like we say that, there will be always limitations in terms of how many customers will come to the market, because like you said, that people, those who have disposable income or extra money only, those people will come to market. So considering that, what is going to be your strategy in terms of acquiring, more customers going ahead? Because for you, it's going to be a volume game, right?
Yeah, I mean, we've been profitable from the first year of the business. So I mean, we are, I think, one of the most profitable startups in India. I mean, I don't know if we can quantify ourselves as a startup anymore, but yeah, so in terms of the second question you asked was, I mean, we don't really track per customer, etc., because we don't spend any money acquiring a customer. So, so we are not in this whole, I spent 3,000 rupees acquiring a customer, I need to make 3,000 rupees. But the problem is, when you start looking at, I think, revenue per customer, you will have an incentive to get more revenue from the customer, right? And as a business, we have taken a stance that we will never nudge our customer to generate revenue. Like I said earlier, right? As if anything we're doing, we're nudging our customer to do less which means it might generate lesser revenue for us. So we have as a business taken a stance that we will not put any revenue targets or track customers by revenue, or do anything which pushes people, because in our business, more revenue is generally bad for the customer. We've taken that stance. As in terms of customer acquisition, what will we continue doing? I mean, we'll continue doing what we've been doing till now, which is try and work hard and offering a product which is good for the customer, and continue improving on the product. Like I said earlier, we haven't till date spent a single rupee on a customer acquisition. So not a single ad, not a single digital campaign or whatever you can call it. So we have relied completely on saying, we have to, which also forces us to continuously keep doing better on the product. Because unless we keep improving our product, it's very tough to get organic customers. And so it kind of pushes everyone within the team to also improve the quality of product, quality of support, and all of that, because only then can you get customers organically.
Great. Now, last two question, I've almost come to an end. One is I would like you to give us your observation, share your observation on the whole fintechs, the companies operating in financial technology space, or the so-called innovators. What do you think are they doing according to the innovation? How should they reach the next level? Few of them are already listed companies. But my worry is, or maybe it's not just mine, most of the business analysts and the financial analysts speak that, yes, they're coming with a great innovation, offering greater solution, no doubt about it, but none of them are profitable, or maybe 1 out of 100 is profitable. So is it a good business model according to you? Obviously, India has been producing great fintechs. That great story we all know. What is your, observation, or maybe what is your perspective here in terms of the fintechs operating in this space, and how should they become profitable or reach to a next level?
See, this is not just limited to fintech. This is kind of, this extends into the entire startup ecosystem, and not just in India, but across the world. Right? I mean, even if you were to go pick up the startup ecosystem in the US, hardly anyone is profitable. And the reason for all of this really comes because of the fact that, there's been a flush of liquidity, right? As in there was, we were in liquidity excesses over the last 5-6 years. So that meant that there was more demand for people wanting to invest into stocks than supply. And the thing was, a lot of these venture capitalists and private equity guys, they were almost incentivizing growth over profitability. So growing fast really got you to build, if you grew fast, you would get attention from investors. So what it meant was, the entire startup world kind of played to that game, right? So everyone tried to grow fast because they knew that if they grow fast is when there will be interest from venture capitalists to fund it. And, I was saying this to someone else yesterday. I said, we do what the incentives give. I mean, at the end of the day, it all comes down to that, right? As in, if you give, one monkey a banana and, for jumping from the table, 10 other monkeys will do the same thing for the same reward, right? As in, it's really the same thing. As in, so because the incentives were so aligned to grow fast versus trying to chase profitability, I think everyone did the same. But the world has changed. The liquidity excesses are probably over, and I have a feeling that most of these companies will transition over the next 2-3 years. Into, it's not that these people don't want, can't be profitable. To be very honest, I think a lot of these businesses, if they really want to be profitable, they can become profitable quickly, right? It's just that they are in that whole mindset of growing fast, right? As in, and that mindset change, I think, will happen when the flush of liquidity reduces. And we're already seeing some of that talk, and some of the startups already focusing towards it, kind of cut the flag and question your customer acquisition costs. Because in a lot of these cases, most people end up spending too much money acquiring customers, and if they were to just tone down on the customer acquisition costs, I think a lot of them will end up becoming profitable.
Very well said. In fact, that comes with your 12 years experience, and I'm sure some startups and fintechs will, take this as a good lesson. Thanks for sharing that, Nithin. So let me come with the last question now, specifically about you and the Zerodha. So what's going to be the future for Zerodha, or what do you see for Zerodha in next 2 to 3 years? Would you, or are you happy to work as a platform itself, or you also, are offering people to buy stocks of different companies on your platform, but you're also planning to hit the stock market on your own and coming with an IPO. It's something like that you're thinking, and maybe building a headquarter in a glass house in Mumbai, which most of the stockbrokers have, like Motilal Oswal, India Infoline, or Anand Rathi. Do you think like that? So what's going to be your strategy for next 2 to 3 years?
Firstly, I think, as a core team, we all question growth. As in, so everything we purchase, we question if it really is required or not. Because I don't think we've done anything for vanity till now. So I don't think glass houses, etc. are happening. We've already, we have said that we'll be permanent work from home. So even the existing offices that we have is a lot more than what we really require. Secondly, in terms of IPO, the problem for us as a business is there's not too much predictability in the business. We are very highly dependent on the underlying stock markets. Our new user addition, our revenue, etc., is very dependent on, what happens to underlying markets. And so, when someone asks me, Nithin, what will happen in 2 years? My immediate question is, can you tell me what Nifty will do in the next 2 years, right? Because if you can predict what Nifty will do, I can predict what our business will do. So it's very tough. And I personally feel that, when companies go IPO, I think there should be some predictability. And the reason for that being, once you IPO, you're getting retail investors on board. And retail investors really the one who can take the least amount of risk, right? And, if you're getting someone who can take the least amount of risk when you're cap table, I think, business should be able to predict, better. But I also understand it's almost hypocrisy from me to say we will not list. When we are the largest platform for buying stocks in this country. We are hoping that there will be more predictability in the business in the future, and whenever we feel that's going to happen, I think we'll list that day, because we've been trying to scream out loud saying there has to be value creation for retail investors, etc. So maybe at some point of time we will get up and when there is predictability, etc., and take that stance and actually.
Sure. But no timeline in mind.
Yeah, it's like I said. Today there is no predictability. First we'll have to solve the predictability problem. So.
No, sure. No worries. I think that's very clear, Nithin. Absolutely meaningful thoughts here, and thanks for sharing all those thoughts. So let me stop here and thank all the people those who are watching this. So that's a wrap, ladies and gentlemen. Click on the Fintech Diary tab to view our previous episodes. Also, if you liked it, please don't forget to share it on social media also. And please ensure you have subscribed to our daily newsletter, which is absolutely for free. Thank you so much for watching and sharing your valuable time on ETBFSI platform. Thank you so much.